You're seeing the central banks buy more gold than at any time in history, and they're continuing to do so. You see gold at pretty much all-time highs against the majority of the currencies in the world, including the second and third largest economies in Japan and China and Japan, respectively. And I think that, in times of uncertainty in particular, we would expect to see a rush to stability and safety. A lot of times that ended up being the dollar and the treasury market. But what we see now are those same entities that were always buying it in times of uncertainty are now offloading their treasuries, and they're moving in favor of gold. And so I think that ultimately gold goes much, much higher. I think that those that have been accumulating it have been using the suppression of the Western market in a very methodical accumulation pattern. By the same token, I think that this could incentivize those large institutions to perhaps double down on their time frame. And so it could very quickly push the price up much higher. I think it's more along the lines of the banks doing all they can to suppress the rhetoric, to quell the desire to do just that, to de-dollarize, to dump your treasuries, to dump your securities, just like the Chinese have done in mass. Most they dumped last month and any time in 4 years. So they want to calm down the atmosphere, and they do that by tamping down the price of gold and silver, at least initially. So I think we should expect some volatility, but we have broken up here just the other day above the majority of the moving averages. So,
okay,
I guess I would say that ultimately the price goes a lot higher, and even though if it doesn't happen immediately, or ultimately it could be the catalyst that propels it much, much higher. When you look at the very fragile state of the U.S. economy and the U.S. banking system in particular, and the markets, which, if you take a look at the economy, we're seeing so much of the liquidity being drained out of the system. The money supply is dwindling. The liquidity in the repo market is leaving the market and going chasing higher yields in the treasury market, directly to the treasury. But it's that same environment where we see a massive drain of liquidity that almost broke the whole system in 2019 with the reverse repo, or the repo market blowing up, and the overnight lending rate, which is what the repo market is by the Fed, going up to double digits, and it just could grind the economy to a halt. So I think that would be best case scenario. The worst case scenario is the petrodollar trade collapses and hyperinflation emerges. But look, independent of this, in August, China sold the most securities, both treasuries and US stocks, it has done in over 4 years. And I think we're getting to a point, Todd, where you could argue that this country, and most people, not those listening to you and I perhaps, but most of the people around us, have been lured into a false sense of security, thinking that we can do whatever we want when it comes to borrowing and spending. Many of the countries in South America, they are moving towards an alliance with the BRICS nations, just like Argentina, who has the largest natural gas supplies in all of South America and control the Straits of Magellan. Venezuela has expressed interest, I believe, in joining the BRICS. And if I'm not mistaken, they have the largest known oil reserves in the world. Venezuela does. And untapped, perhaps much of it untapped, or I do believe I'm right on that. In fact, I'm about 99% positive, but they have every intention, I believe, of following Argentina's lead and moving to this BRICS coalition. They don't have any love for the West. You saw in the last year, we've seen Iran join the Shanghai Cooperation Organization, which is the largest regional military group in the world, amongst other things, along with the BRICS nations they joined. We're seeing the potential, I think, of what could act or turn into some sort of an OPEC style embargo. That's like Mike's Operation Sandman, where all of these countries dump dollars because they're no longer needed to be stockpiled for energy like they have been for the last 50 years. That was the agreement we struck with Saudi Arabia, and OPEC will protect you. For that protection, you'll denominate oil globally in dollars. And it's created a synthetic demand whereby if everyone dumps dollars because they don't need to take it for oil anymore, it becomes a massive problem here, massive inflation, hyperinflation potentially, with interest rates that spike to compensate. Look, this isn't just something that could happen. Let's just take a step back and not go that far. But we could say, look, Iran, could very easily halt the passage of tankers coming out of the Straits of Hormuz, which control over 20% of all the global oil supply. This in and of itself could create a massive spike in the cost of oil, which I expect it will. We're already seeing voluntary production cuts by Russia and Saudi Arabia. I think we will see higher oil prices, which will create higher inflation. Everything we touch, from surfing the internet to any product that you touch, has some component of oil in it to either create it or bring it to the marketplace. Okay, I think markets go higher than anyone ever thinks possible. Yeah. And at the same time, bull markets go higher than anyone thinks possible. I mean, look, when I started in this industry, the Nikkei was 40,000, and it lost 75% of its value over the last 30 plus years. It's still never come back. The Dow Jones was 2,100. No one thought it would go up 18, 19 times almost. But that's kind of the point. I think that when you see this type of a scenario, that could be much, much bigger than people think. August alone, the Biden administration spent $527 billion. It took us till 1975 to accumulate that much debt. And in the last 18 days, they've printed $450 billion. The difference between a commercial strike coin like this, which is a 1 ounce silver eagle, and a proof silver eagle, that they take this same piece of blank silver called a planchet with just imagine this with no design on it all, just a blank disc. And a commercial strike, they'll stamp it once, they'll put it in tubes of 20 and boxes of 500, send it out to the distributors for us to sell to the public. You cannot buy those directly from the mint. You have to buy them through one of the distributors or a company like mine. The proof coin, they take that same piece of silver, they polish it under an industrial buffer until you can nearly see your reflection in it. And then they'll stamp it 2 or 3 times for enhanced definition and put it in a velvet box and sell it for 3 times its melt value. It is a collectible, but yet, it's one of these deals that there really isn't much in the way of rarity in them. They're very nice. I have 3 kids. I buy 3 every year for my kids, but it's different than having it be the majority of your holdings. And a lot of companies will misrepresent the laws surrounding IRAs. They'll tell people there's better potential.